morning, I'm James Gruber and welcome to the Morning Report for Friday the 10th of July. Well, the US and Iran traded airstrikes overnight as fears grow of a return to war. Share markets, though, seem to brush that off, with technology stocks again leading the charge, while oil tumbled despite worries about another closure to the vital Strait of Hormuz. The question is, why are share markets rising given the renewed fighting in Iran? Perhaps the so-called taco trade is back. That is, Trump always chickens out. While harsh, markets seem to be again betting on Donald Trump not wanting a prolonged war, especially with midterm elections in the US not far away. Let's take a deeper look at what's happened with Aussie futures, commodities and currencies. The ASX is poised to open steady with index futures flat. As for the ASX 200 yesterday, it closed down 0.8% to 8,715. It was the fourth straight negative session, with heavyweight miners and banks leading declines. Today, there could be a bounce back in miners given higher commodity prices and the lower US dollar overnight. On those commodity markets, global oil prices slid on worries that inflation and a slowing economy could weigh on oil demand, even as the growing conflict between the US and Iran limits supply by delaying a full reopening of the Strait of Hormuz. Brent crude futures settled 2.2% lower at $76.30 US dollars a barrel. Base metal prices jumped as the market shrugged off the strikes between Iran and the US, and the dollar dipped after a recent surge. Copper futures climbed 2.7%, while aluminium futures gained 1.6%. Gold futures advanced as bargain hunting emerged after prices fell to a one-week low. The futures settled up 1.4% at $4,140 US dollars an ounce. Meantime, iron ore futures were steady, declining 0.3% to 98.57 US dollars a tonne. Let's now have a look at currencies. The Aussie dollar was last trading a little bit higher at 69.39 US cents. And going back a step now to see how Wall Street and other world markets did, the Dow Jones Index finished up 0.3%, the S&P 500 rose 0.8%, and the Nasdaq added 1.3%. A closer look at the trading day there, US share markets climbed on Thursday as Micron Technology fueled a rally in chip stocks that eclipsed fears that renewed US and Iranian attacks might prolong the Middle East conflict and fuel inflation. 7 of the 11 S&P 500 sector indexes rose, led by information technology up 1.7%, followed by a 1.5% gain in consumer discretionary. The Philadelphia Chip Index surged 3.1%. Micron Technology jumped 4.5% after laying out plans to invest more than $250 billion US dollars in America through 2035 to benefit from demand for memory chips to supply the boom in AI. Applied Materials gained 3% and SanDisk surged 7.6%. Meta Platforms rose 4.7% after Reuters reported that the company plans to manufacture AI chips starting in September. IBM fell 2.2%, but Microsoft edged up after Bloomberg reported Starbucks had tapped AI to reduce its reliance on both companies. PepsiCo, meanwhile, fell 3.3%, despite the snacks and soda giant beating second quarter revenue estimates. US government bond yields declined as investors took advantage of this week's sell-off to buy bonds. It was despite a 30-year bond auction that drew the highest yield in nearly 20 years, underscoring how a swelling bond supply is driving investors to demand higher returns from government debt. The US 10-year Treasury yield lost 2 points to 4.55%, while the US 2-year Treasury yield fell 3 points to 4.17%. Moving to the European markets, the continent-wide FTSE Euro First 300 index ended 0.8% higher, and the UK FTSE 100 fell 0.2%. Broader European share markets gained for the first time this week on Thursday, as a rebound in tech stocks tempered lingering concerns about the war in the Middle East. Computer chip stocks Siltronic, Swatech and ASML rose 13.4%, 5.9% and 4.8% respectively. Global sentiment was buoyed by a report that China could allow domestic AI firms limited access to AI leader NVIDIA's H200 chips, suggesting demand for AI infrastructure could get a boost. Healthcare was the worst performing sector, down 1%, led by a 6% drop in AstraZeneca after the drug maker's nerve disease drug Wainua failed to meet the main goal of reducing cardiovascular deaths and recurring heart problems in a late-stage trial. So let's now take a look at what's on the watch list. In the US, Delta Airlines is reporting second quarter results today. Next week, the US earnings season really ramps up, starting with JP Morgan, Goldman Sachs and Bank of America on Tuesday. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.